Good morning. Welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. This stunning bronze dragon sculpture, Kiko, by the renowned artist Nano Lopez, is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like you have your hands full. Ashlyn, can you grab a book for him? And I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Pries.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
This Catapult Reversal could be the trade that makes our entire week. With the FOMC rate decision arriving tomorrow, the biggest catalyst of the week, today becomes all about positioning, timing, and exploiting the quiet before the storm. And when you combine that looming volatility with the well-defined sideways range, you get one of my favorite conditions for this precision trading. This range wants to rotate, and when ranges rotate, they often launch the exact pattern we're looking for, the Catapult Reversal, aka ignition bar. If we're patient, this could set up a textbook entry. Really quick, I wanted to have a shout out. What's happening, Henry? Long time, man. Hey, we got to catch up. Make sure we give each other a call. Robert, what's happening? I got a call from James earlier today. He wasn't going to make it, but we'll give a shout out to James. Anyways, good morning. Welcome back to another Team Day Trader edition of the Daily Market Analysis. Settle in, grab your coffee, and let's prepare for today's trading session. As always, subscribe, because that's what YouTube wants you to do. Subscribe and explore the resources linked in the description below. Now we get that out of the way, right? Oh, let me refresh this dashboard. A couple things I do want to talk about as I reviewed this earlier. One, I want to talk about, we already know we're going to talk about the Fed rate decision a little bit, but I wanted to pull up the 10-year really quick because I am watching this closely. This head and shoulders, or this inverse head and shoulders pattern right here, right? Tomorrow should be a catalyst and I'm watching very carefully because I know everybody in their mindset. I mean, I've talked to so many people, not so many. When I say that, I mean the nice or the advantage I feel I have in life that is very fortunate is the different businesses that we operate in, but also then the different connections and touches that I have with different people and different mindsets across different opinions, places that they are in life, whether it be real estate, whether it be private equity, the clients, the diverse clients that we have in all the different businesses, the automotive shop, and everything else. And I'm always having a conversation with people, and the general everyday person, right? They have this assumption, and that's the best word I can say is assumption, that the Fed's cutting interest rates, and then, right, so then lower mortgage rates, lower 10-year rate, a little bit lower on the long-term rates, yada, yada, right? The curve just kind of all comes down simultaneously. And I am watching this. And again, I'm not, right, I let the charts tell me, but I'm watching this pattern here on the 10-year very carefully as, the Fed cuts the rates tomorrow. Obviously, it's not like it's a big deal. It's a quarter basis point. So, it's not like they're cutting a whole 100% basis point. It's just one quarter point. But there's this assumption that the Fed's cutting rates and like the lower, we're going to get this refinancing boom in the mortgage industry, yada, yada, yada. I can't article after article or even people that I'm discussing, but when I'm looking at the price action and the bond market, this just looks like they want to rip this thing higher, and maybe spreads widen from the short rates to the long rates, and right, maybe the Fed's cutting rates, but then longer term rates go higher. And so I'm watching that very carefully, where it's almost like an inverse of what is what people think is going to happen, and right, that kind of changes. Now again, I might be getting ahead of myself. I'm just watching it, so I'm just kind of telling you guys my in real time thoughts. Is I'm watching this. This is definitely, not saying that the Treasury rate kind of takes these technical patterns that we do on charts. Right, there's the fundamental bias on the long end, or in the long term, always takes out technical noise. But this is a very I'm watching this very carefully. I recommend you guys watch it too, so that you don't make the wrong assumption. And that's the biggest thing, right? It's not what you don't know that gets you in trouble, right? That whole saying of, it's not what you don't know that gets you in trouble. It's what you know for sure that just isn't so, right? So here you're taking this assumption that Fed's cutting rates, we're going to have lower rates, mortgage rates are going to go down, yada, yada, yada. And it's the wrong assumption, right? This bias that you believe, and then that's not true. And then, right, so that whole, you're taking, whether it be market positions in the markets or portfolio construction, and we end up having higher rates than what you would think would happen. Anyways, I want to start off today. It's Tuesday, first time I get to see you guys in the beginning of the week. Tomorrow's the Fed meeting, and I think it's important to understand what Treasury rates are doing ahead of that. And then if tomorrow ends up being that catalyst, does the whole Russell, come back in? It was buy the rumor, sell the news situation. Rates drive higher, and right, there's calamity. Again, I don't want to speculate too far ahead of that, but I am watching that. I'm not going to be just hard-headed and thinking that could not happen. couple other things I did. What was I looking at earlier too? I think Toll Brothers. Yeah, Toll Brothers. After the bell, I'm gonna read that, how that goes. Again, being in Myrtle Beach, being in real estate, right? We have Toll Brothers here, right in Myrtle Beach, some subdivisions. So I am gonna be curious at what they say, and I'm gonna be reading those transcripts. So just to give you guys a heads up, little things that I'm watching. Other than that. Home Depot is having a event today. I don't know how much that's going to be anything market moving. Gold is still, or not gold, crude is still hovering around that $58, $60 mark. Still have that position on. I did take I was talking to a couple friends of mine over the weekend, and on Friday I took a long position in milk futures. So that's the first time I ever took. This will be the first time taking a position in milk futures. So I think it's DC. What do you got here? Henry says, yeah, I can't see any refinancing. Maybe once there's something more substantial, offset the points above. Yep. Bank of Japan interest rate decision December 18th. Yeah, keep an eye on that. Obviously, it's been, right, that move. I think when we were going through COVID, right, everybody was kind of caught and they were late to the party. And then now, or everybody was raising rates, they weren't moving. And now you have the inverse for a couple years now where they're kind of moving rates higher and we're cutting rates. So, again, that whole, I know that was, was it a year ago, Henry? That was a big deal on the yen carry trade unwind, yada yada. It was only like a couple days, and then they shot it right back up. So, but it was a scare. Everybody was making a big deal about that. So, with that said, let's get on to the charts really quick. I'm not going to spend too much time on this because we're going to spend probably some more time on it tomorrow and on Thursday, where we talk about, right, one, Fed rate decision tomorrow, 90% chance, it's baked in. The biggest thing we'll talk about, maybe not tomorrow because we won't have the information, but I'm sure on Thursday, most of the morning analysis will probably be going over the SEP, right? The dot plots, the SEP, and the forecast. Also, the one thing that you can do whatever you want. Sometimes I'm always thinking how I'm talking to you guys. But I am watching this probabilities. Again, we're going to get this cut now, right? Which is pretty much baked in. But they're only counting for one cut come summer, so second quarter 2026. And then there's only one more cut all the way to the end of 2027. I'm really going to watch how market participants in the talking points and in the SEP tomorrow as it comes out, how this changes. Does it change? Does it not change? And right, what's that forward outlook in the curve going to be presenting us? I think, at least for me, when I think of the legacy portfolio and the portfolio construction, that might have to be some rebalancing inside of there. So we'll watch how that plays out. We'll probably talk about it a little bit deeper in context on Thursday. So with that said, let's get into the morning analysis. Right, we make our money trading. That's how we make a living wage in our day trading activities. As of 7 o'clock, when I wrote this, it is obviously almost 9. So again, 2 hours later, when I wrote this, though, at 7, we were trading at 6 points higher. Overnight activity gave us a negative skew of negative 2.59 net short volume delta. Again, hinting that sellers leaning into the session, but not strong enough to shift the broader balance. We are opening in balance, and the 10-day average true range is around 60 points. As I show you guys some on the charts, we will be looking at, there is this high volume distribution node that's building out, as we've talked all the way, even all of last week, almost all of last week, and today, right? The levels and everything is the same. We're still dealing with that low volume node, the LVN at 6810 and 1050, right? 6810.50. We're still dealing with that. And then again, we're just waiting for, and again, I'm more than likely the catalyst will be tomorrow, that close above 6,900, which will kind of take us to all-time highs as we'll, right, we're trading in balance, and then it will move from in balance to out of balance. Or we'll get that 67, 65, which will again kind of, really push us to the downside, and we'll have to watch how that plays out. Really on the monthly bar charts, let's get into that. I will be, just so I reference this, right, I am looking at trading day trade setup type 3 going into today's morning session. So really want to highlight that, just kind of, right, to get myself credible. Again, this is that on a long-term chart, right, the weekly, obviously the daily, this is that inverse head and shoulder, and we're just kind of breaking out. I'm watching, probably today will be like that inside day, kind of pause, and then tomorrow will be like, do we just break out? And then, we're kind of shooting for a 5% 10-year, right? Interest rate go up, bond prices go down, or does this fall back into bed and we're just going to chop? When I think about this, we're at the top end of this range. You could box this out in a box range. Even though, yes, there is this head and shoulders pattern that's playing out in here, right? This could just easily roll over into tomorrow, which then, going into thinking longer term, January into February, probably not much. My portfolio is constructed right now with a little bit of anticipation of rates kind of stabilizing, not really doing much, not really going higher, not really going lower, and again, kind of this sideways trading range action. That's why I make this comment, because again, these are my thoughts in real time about, what I'm doing, and anybody can just, you can either do what I'm doing or not do what I'm doing, or take that for whatever it is. This is definitely not telling you what to do, or I'm just kind of going through my thoughts and how I'm going through the market on a day-to-day basis. But if rates are going to scream up and we're going to kind of start heading towards this, high fours, even getting into the fives, right? If this kind of breaks out into this range and we're going to start marching towards that, definitely have to rebalance and kind of, take a look at the legacy portfolio. But other than that, I am watching that. So that's why that's on there first. But let's go to the volume profile chart. This is the big, right? This is kind of where we take the long-term approach, or not the long-term, but the short-term approach as we're trading. I am coming into today a long-term neutral, short-term neutral as well. I think yesterday kind of neutralized the trading, right? We on this hourly chart, what were we talking about all last week, where we're making these, right, higher highs and higher lows, and right, we made a lower low and a lower high, and we're sitting in this range. We do have this, right? We're trading into this volume distribution. Again, this is that 6810 and a half into this volume distribution, and then the developing, again, this is not static, this is always developing this point of control on this chart. On this chart 2 that I've created, this volume profile chart, the developing point of control is 6670, and right, we have this volume distribution, right? So there's really 3 distributions. The one thing I do want to talk about longer term in this hourly chart is, right, we talked very much, and I'm watching this pattern where you have a spike, right? We have a spike into a channel, and we're rotating inside of that channel, right? We have this channel rotation. Now, in this pattern, the channel will break. Usually what happens, and this is, again, back test this. You can back test this all you want. But as this pattern has a high probability of working out, is you rotate in a ascending channel, it breaks the channel low, and then comes down into the base of the channel off of the spike, and then that's the pullback, and then it's a resumption of trend. This is, when you back test this, this is how this pattern plays out the majority of times. And I'm not going to give you specific percentages, right? That's for people who are close to Team Day Trader, as well as, right, are part of, or any of my clients. As we've, right, that's work that we've back tested. I'm not just going to give that out freely to a free YouTube channel. But I'm just going to tell you that it's this is how this plays out. Now, the other ways that this pattern specifically plays out is you'll get a spike into a channel, and then you'll have the failure. That's the second, when we back test that, this pattern pulls back, pulls up, and then breaks down, and then goes back all the way to the back of where, or it goes all the way back to the beginning of the spike, which would take it all the way back down to, you know, say 65.40, because that really was, looking at this chart, you guys can't see this because my webcam is is down, right? It's like down here. So you guys could see it on your own charts, but that kind of start of that spike was down at 65.40. So again, this is, right, again, I'm just thinking of probabilities. The first setup is the majority of the time. The next time is the failures. And then there is this pattern that comes out of this where there's a spike in channel and it grinds, and then it ends up just busting out on the top side, and there's never no pullback. Now that does happen. It has happened. And but it is the least of the probabilities. So again, when we talk about this spike in channel, right, this pattern, right, it either goes up or it goes down. So this is two-way trading, up or down. And right, so the pullback to up is what happens most of the time. The failure happens the second most times, and then when you back test this, the least amount of probabilities is you get a spike in channel, and then it does never give a pullback. It channels in an ascending, and then boom, an explosion. Now, we have where that spike in channel broke, right? And so now we're trading in this range, and then look at where we're trading. If we go right, left, right, we're just filling in this, back in filling this volume node. So again, when we think about today, right, as we open up, think of tempo, you know, is the market moving fast? It's going to, you know, we also think of context where we got tomorrow is the FOMC. And again, I highly doubt, if you just think about this, you know, rationally, if you were managing a Yale endowment, and this is the question I'm always asking. If I was managing Yale endowment, am I putting on positions ahead of the Fed? No. What was I just talking about earlier where we were talking about the 10-year? It was, I'm looking for the reaction, and if the reaction isn't what I'm anticipating, then I'll rebalance. I'm not going to rebalance before the Fed tomorrow. I'm not going to move my legacy portfolio and do anything today when it comes to that, because nothing has shown me any new information. I know the catalyst is tomorrow, and if it plays out differently than how my portfolio is positioned, then I'll rebalance. And that's where you get the big moves, and the big, you know, the catalyst is this kind of rebalancing, larger portfolios, larger institutions, and they rebalance. Other than that, you're not going to get those people moving the market and rebalancing ahead of the FOMC. So, when we're looking at day trading today, that's the thing that you want to keep in the back of your mind is either one, you can cut the day short and just think, hey, nothing's going to happen. And, if you got other things to do, it might be worth it to do those things. Or otherwise, if you're going to trade, understand that, you better be drinking a lot of coffee to keep, otherwise you're going to fall asleep in front of the screens because it's probably going to be like a slow grinder of a move today. Go to the, let's go, I'm going to slide by these really quick. Again, we always show this chart, or I show this chart. Again, as I look at last week's distribution, and then we go into this week's distribution. Again, we're sitting in last week's static value, and again, we're opening up right in the middle of what I would consider is this, right? This is TPOs now. So time and price. This is the volume. Now the volume distribution high watermark, the HVN high volume node is sitting around 68, 63, 63. And then right, but the TPOs are sitting in here around the 50s, 68, 50s. And that's where we're really trading at right now. So again, what does this to me signal, right? That the kind of market participants are just kind of sitting on hands, and I'm expecting a little bit of, again, that day trade types 3 as we just kind of sit in this established balance. If we go now, other than that, I don't think there's anything on the other charts that screams to me, hey, we got to take a look at. Let's just get to the trigger chart. We might have a little bit of extra time if somebody wants me to pull some other chart up. But, again, yesterday's pullback move, right? Again, we're just not going to, doesn't grind up forever. There is some kind of move that takes place. So we either get the pullback, which that's what we're looking for in the bigger, greater, in the longer time frame of the hourly chart. And so again, this wouldn't be surprising to me if we pulled back, started the pullback yesterday, and did like a AB equals CD kind of two-legged pullback where we pulled back, right? And then you get that little bit of a pullback. And again, we're still anything above 68.10.5, we're still, right? Buyers are in control. So there's just a little bit of, not aggressive buying before tomorrow. So as far as us taking advantage of today's day trading, opportunities, right? It would just be, hey, I want to fade any of these highs. And then, you wouldn't really want to buy anything low aggressively until you got into something like those 68.10.5s, which can happen. But again, if it's going to be slow tempo grinder, I could just see this almost like similar to yesterday where you just kind of have this, kind of grinding motion, all the way down. And again, that two-legged pullback into that 68.10, which would really set up for tomorrow for, again, that catapult reversal where we kind of pull back in, two-legged pull back into 68.10.5. Right, let me see if I can back this out a little bit. Right, where we kind of, we've been grinding this market higher, and then yesterday was the first of a pullback, and then we get another kind of second in the pullback and get down into here. But again, reality is that if the tempo's slow, this might just drag out all the way today, and they'll probably pit. If I was trading, zero DTE trades, or if I was Citadel or anything else, I would probably try to pickpocket a whole bunch of retail traders where I would try to shift and move the money with low volume and shift and try to pickpocket any retail traders, you know, give them this kind of look and then psych them out, make them look like it's bullish, get them long, sell it, liquidate, have a short liquidation, and then, right, everybody flip short and then get them long, and then, like, you know, and again, get everybody off sides and a lot of pickpocketing as they kind of pickpocket and move a little bit to the lower. So that might be a little bit hard to do. Again, I doubt we're going to really get a push up. That will more than likely be tomorrow in the greater schemes of the reversal. So today will be a little bit of strategic positioning going into tomorrow. And I'll be watching that. Now, you know, again, day trade type 3. I'll probably be playing both sides of the short and long given the opportunities in today, fading some of the moves where, right, I'm expecting this to stay in balance here, and then the object is to fade some of the moves as, right, price will more than likely, even though there'll be a little bit of a migration, you know, lower overall, right, there'll be opportunities depending on how the market makers pickpocket, as you can take advantage of short and long opportunities. Again, most of you guys that's been trading with me, I don't know if Henry remembers, it's been a bit. Robert should know. I know James, as he watches this, he'll know, right? I only take 5 trades in a given day. That's kind of like I got a rule set. So any more than 5 trades, I think you're in my trading. That tells me I'm hyper trading. So I don't take too many more trades than 5 trades in any given day session, right? I try to slow my trading down to a level of taking good setups, not scalping, not hyper trading, and waiting patiently for the good setups to set up and capitalize on a good trade. So, you know, when it's slow tempo, you know, it really kind of pushes your discipline. So other than that, that's how I'm trading today. I'm looking at more of a little bit of two-way trade action, thinking day trade type 3. I know I've said that 50 million times. And, you know, that's kind of the look. You know, when it gets into these choppy trading, you know, there's not like a clean setup of, you know, it's in real time. You have to see it. And again, that kind of fading the highs up in here and then watching this low, you know, yesterday's low day will be an influence. The 68.41 and 25 will be intraday level. And again, I'll be watching that as this comes down, right? Day trade setup 3 as we play around here, and then watch for a normal variation day as, you know, if we do get a break lower, right, you might get extension. I'd watch after the IB, right, the initial balance gets formed, and then watch how that plays out. Again, you got 50 points of range, so this could, right, we're trading at 68.51, easily come down into 68.10.50. We'll have to watch the tempo. If it's a slow grinder, I'd watch for choppiness, and, you know, you'll have to play that two-way. Watch as the day ends. I am, you know, when I think of like a day candle at the end of the day, let's go back and we'll close it out here close to on the dashboard. But let's get back to the dashboard. And only one trade a day if you are new to trading. Yeah, Henry remembers, man. I mean, I just told that story on Friday, Henry. Right? The whole one trade a day. Let's go to the watch list. And I'm, you know, so when I think of this chart, and let's blow this up into a daily chart. You know, the thing that I'm looking for is, all right, as I'm setting up today's trade, in my trading, I'm looking at where we're opening up in price relative to yesterday's range, and then again, how close are we to the yesterday's low a day, and how close are we to yesterday's high a day? And when you look at that, we're opening up closer to yesterday's low a day. So either one, we're going to open up, let's just do it with colors. Right? So your chart, my chart's gold, but most people's charts are red and green. So we're going to open up, right? And do we get like just a little bit of a poke below, and then, right, we finish out, and do we then take out yesterday's high? That is possible. In my eyes, I just think it's not probable, right? Anything's possible, but what's probable? And so I don't see this playing out to that degree where it can happen, and I'll be watching for it, right? The way that will look is, right, I don't want to see prices accept and really take off, and you get day trade set up 5, and then you get a takeout of 68, 62 and a quarter with a little bit of conviction and a high volume. Then yeah, this day trade setup 5 will play out, and then you'll get something like this. Possible? That's not my base case. My base case is it ends up, we open up, right? And then I'm looking for a little bit of excess on the highs, right? They fade, you kind of fade that, and then we make a little bit of a bar lower, right? And then it's just, here we had a hammer bar, right? And then you had a move lower yesterday, and then a little bit of a move lower today. And then again, this kind of sets us up where, again, that spike into that channel sets us up where there's the pullback into the base of the spike, and then, right, tomorrow is the move. And so that's what I'm looking at. So I'll probably lean a little bit more on the sell side than I am on the buy side, even though my longer term is, right, this is bullish. Although in the beginning of today, I was telling you I'm long-term neutral. At least that's the way the charts are setting it up, as well as short-term neutral. So today's trading kind of sets up like a short-term neutral bias. But again, in this context that I'm looking at, today just has a setup where I'll probably lean, unless my internals tell me something different. So unless this 4-box grid tells me something different where I should be, leaning long, as long as this is confirming my, setup going into today between the VOLD, the ADSPD, and the tick, I'll probably take more short trades than I would long trades, unless, right, this is just telling me, day trade setup number 5 is kind of in play, and 3 is not in play. So, but right now I'm looking at day trade setup number 3, and then going again a little bit as we pull back going into tomorrow's context. So anyways, hopefully that's helpful for everybody watching in today. Henry, nice shout out, man. It's great to see you. We got to call each other, man. I got to get you down here to South Carolina, to Myrtle Beach on a vacation, and shoot the shit and meet up with you. So I don't know. We got to put that together. Everybody else, that's all I see in the chat. So Robert, how's it going? And obviously I talked to James earlier today. Otherwise, everybody have a great day. As always, learn, trade, profit. And you guys can see on the side ways to get a hold of me, ways to come check out the office, call, email, websites, the whole 9 yards. And, go through it. 100% we need to catch up. And however you guys want to check us out. Anyways, see you guys tomorrow. FOMC tomorrow. It'll be fun. Later.